BlackRock CEO Larry Fink goes on TV today and says he is still very bullish on Bitcoin and that BlackRock's ETF is the fastest growing ETF in the history of ETFs. He also said the Ethereum ETF can still be approved even if it's categorized as a security, and that comes on the same day as Fidelity files for its Spot Ethereum ETF. And Coinbase takes a loss in the SEC's lawsuit against them, but this is not the end of the story. What happens next? We're going to share what different attorneys are saying. Let's get into it. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, let's start by taking a look at the top trending tokens on social media. This data is brought to you by Sentiment. If you want to sign up for a pro account, link will be in the description. You can get a discount using the code Thinking Crypto. Now, folks, first up is Singularity, which is AGIX, or AGIX is the token symbol. Coming in at number 2 is Fetch.ai. And the reason these tokens are heavily trending is we got news today that Fetch.ai, Singularity Net, and Ocean Protocol agreed to combine their crypto tokens into one and create an alliance for decentralized AI. This is huge. I've honestly never heard of tokens merging together, and these AI tokens have been ripping it, guys, making massive gains. Many of you know I took profits on Fetch.ai when I hit like 560% returns on my initial investment. I had to take profits off the table. So I'm very bullish, and it goes back to what I said in December 2022. I believe AI would be a strong narrative in this bull market. I also have Render in my portfolio. So the headline reads, 3 decentralized platforms to merge AI tokens, create AI alliance. Let's go through the details here. The 3 are seeking to create an AI collective, providing a decentralized alternative to existing projects that are controlled by large technology companies, according to an emailed announcement on Wednesday. FET, the native token of AI-focused Web3 platform Fetch.ai, will become ASI, Artificial Superintelligence, with a total supply of around 2.63 billion tokens and a starting price of $2.82. The native tokens of decentralized AI network Singularity Net, AGIX, and data platform Ocean Protocol will merge into ASI, both at conversion rates of around 43 cents to 1. ASI will have a fully diluted market cap of around $7.5 billion. This is a huge update, guys, and I'm assuming this token is going to do well, given that you have the merging, the liquidity, and the big notoriety around the names and how these AI tokens have been performing. So this is why, folks, AGIX and FET are both trending here in the top 2. And then you got number 3 is Toncoin with positive sentiment. Coming in at number 4 is Chronos, CRO, which is a Crypto.com token. Litecoin coming in at 6 here with positive sentiment. Velo coming in at 7 with positive sentiment. Mantle coming in at number 8 with positive sentiment. Track Ordinals coming in at number 9 with positive sentiment. And SUI, S-U-I, comes in at number 10 with positive sentiment. So those are your top 10 trending tokens on social media. And once again, the reason FET and AGIX are trending is because of this massive news of merging the 3 coins together. Now let's jump into some really big news. So BlackRock CEO Larry Fink went on Fox Business today talking about BlackRock and its ETF, saying it is the fastest growing ETF in the history of ETFs. Folks, it's incredible how these ETFs overall have been performing, but BlackRock's is knocking it out of the park. And he stated he was incredibly bullish on Bitcoin. Let me play the clip here for you guys.
Look, I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up. I mean, look, we're creating now a market that has more liquidity, more transparency, and I'm pleasantly surprised, and I would never have predicted it before we filed it, that we were going to see this type of retail demand.
So you thought you'd do good, but not this good.
I thought, yes.
Well, IBIT is your ETF over at iShares.
Yes.
it's about to overtake Grayscale, which was in the business certainly a lot longer. You look at the gains since January 11th when it first came about.
Yes.
Have you ever seen this much inflow this quickly into
IBIT is the fastest growing ETF in the history of ETFs.
So there you heard it from the horse's mouth. He was pleasantly surprised. They were expecting high demand, but it went beyond their expectations. So incredibly bullish. And we are still in the early innings of this ETF race because the RIAs and wealth managers are being educated right now. Now, Charles Gasparino, who is one of the folks interviewing Larry there at Fox, asked him about the Ethereum situation with the SEC. And if the SEC were to classify Ethereum as a security, would that be a problem? So here's the exact words as Eleanor Terrett of Fox Business is reporting. There's a lot of noise about the SEC declaring Ether a security, which would take it out of the Bitcoin category as a commodity. How does that translate into an ETF? Larry says, I don't think, look, I really can't talk about this, but I don't think that designation is going to be that deleterious. Gasparino says, so even if it's a security, you could start an ETH ETF? Fink says, I think so, yeah. So let me break this down for you. Is BlackRock and the rest of the Wall Street, banks and investment firms and so forth, able to put securities in ETFs? Of course they are. They've been doing it for a long time, right? They put equities and traditional assets and securities in ETFs already. So it doesn't matter what the categorization of crypto assets are for them because they have the license to do it. And they already have the infrastructure. So this is a clear indication of Wall Street trying to take over this industry. Now, we still have to let things play out. I don't think Ethereum is a security. I don't think the SEC can go ahead and do this because they haven't provided regulations. Congress hasn't provided regulations. This is the battle that's taking place, plus the history, the context, right? The SEC worked with the CFTC to approve the futures Ethereum ETF, plus Bill Hinman's history of saying Ethereum is not a security, and the CFTC continues to rule that it is a commodity. So we're seeing the turf war taking place. So Larry doesn't really care one way or the other because he can still sell it through ETFs, right? So that's why for him, it's okay. But for you and I and the exchanges who may not be participating in ETFs, that would be a problem. But understand the distinction there of why Larry's like, yeah, so it's not a big deal for me because we can wrap anything in a ETF because we have the license to do so. We've been doing it for a long time. But guys, the race is heating up here for the Ethereum Spot ETF because today, $4.5 trillion asset manager Fidelity filed their S1 form for a Spot Ethereum ETF with staking included. So it's the race is on again, just like it was for Bitcoin. Amazing what's taking place. Now, quick word from our sponsor, and that is BitGo. BitGo is one of the top crypto custodians in the crypto market. They have been through multiple bull and bear market cycles. Many big companies in the crypto industry use them, such as Pantera Capital, does Dan Moorhead, Bitstamp, even Nike uses BitGo's wallet services for its NFTs. So BitGo has hot wallets, custodial wallets, self-managed cold wallets, NFT wallets, and much more. They have great security, insurance, and much more. So if you'd like to learn more about BitGo, visit bitgo.com or check out the link in the description. Now let's move ahead. We got big updates in the Coinbase versus SEC lawsuit. So Judge Falia, if I'm saying that right, has denied Coinbase's motion to dismiss and will allow the SEC to continue with its case against the company in regards to the allegation that it operates as an unregistered exchange broker clearing agency and through its staking program engages in the unregistered offer and sale of securities. Eleanor Terrett of Fox Business reported on this. She said, off to discovery we go. So this is a win for the SEC, but it's not a big issue in the sense that this case is not over. There's still more to go. That's why she said, off to discovery we go. It's kind of like what took place with the Ripple lawsuit. They are going to battle this out. And of course, quite a few folks weighed in because there was a nice win for the industry. So Eleanor continued here. She says, so what's next for Coinbase following Judge Falia's ruling? The court will set a full discovery schedule and each side can request documents for the discovery process. Sources familiar tell me some of this case could be undermined and exposed through discovery. So Coinbase will attempt to get as much discovery on the SEC as they can during the process, and the SEC will do the same. She says, I remember during the Ripple case, the discovery process acted like a window into the mind of the SEC. We were able to see what the agency was thinking and saying internally in regards to Ripple and the wider crypto industry. The same applies here. In terms of timing, as we know from the Ripple case, discovery can take many months, and then you have the process of filing summary judgment briefs and then a potential trial on top of that. So this case will drag out over a year at the very minimum. This thing is going to go for the long term, folks. So in the meantime, I'm told one of Coinbase's more near-term options could be to file an interlocutory appeal on some of or all parts of the denial of motion to dismiss if their lawyers think that it makes sense to do so. The SEC filed a request for an interlocutory appeal following Judge Torres's summary judgment decision in the Ripple case, but they were ultimately denied. Interlocutory appeals before final judgments are notoriously hard to obtain. This thing is going to continue here, folks. And look, at the end of the day, all of this may have to go to the Supreme Court, which, initially had put together the Howey test, and we need to get the Howey test updated. Not that we need to abolish the Howey test. We just need maybe a subcategory for crypto assets and how you treat them, because they are not oranges on an orange field somewhere in Florida. These are tokens distributed globally outside of the SEC's jurisdiction, and they're on decentralized networks. So it's not the same thing, and we have to get updated rules and regulations, and this is where Congress needs to act. The SEC needs to work with Congress, but we're dealing with scumbag regulator Gary Gensler here. And remember, the SEC approved Coinbase to go public, right? Knowing their business model, knowing what tokens they're selling, and much more. And Coinbase has one of the strictest processes for listing tokens. So this is all about roadblocking and trying to shut down these crypto startups, not kill crypto. They can't do it, but it's to allow the banking incumbents to catch up because they're getting disrupted significantly. This is why you see Jamie Dimon partnering with Elizabeth Warren on talking points and much more. And of course, who controls Gary Gensler? Who's the gimp on the leash? It's Gary, and he's controlled by Elizabeth Warren. Now, Paul Grewal, chief legal officer at Coinbase, weighed in on this news. I'm not going to read everything he published here. I'll give you part of the tweets that he put out here. He said, today, the court decided that our SEC case will move forward on most of the claims, but dismiss the claims against the Coinbase wallet. So that was a big win. We were prepared for this, and we look forward to uncovering more about the SEC's internal views and discussions on crypto regulation. Early motions like ours against a government agency are almost always denied, but clarity is the ultimate goal, and today's decision continues us on that path. While we continue this process and any necessary appeals, we encourage Congress to build on the momentum we saw last year to advance comprehensive digital assets legislation in the U.S. This is critical if we want innovation to remain in the U.S. Now, Jake Tversky highlighted something here, and I want to give his perspective because it's from a neutral standpoint. He's not with the SEC, he's not with Coinbase. He said the court just decided Coinbase's motion for judgment on the pleadings. Overall, SEC wins. There are some positives. It's great for DeFi that the wallet is not a broker. So talking about Coinbase wallet, and there's good language on other issues like Howey's investment of money prong. He says, but the court sided with the SEC incorrectly, in my opinion. That's what he's saying, on several key issues. For example, the court ignores the contract in investment contract and says Howey applies to purely secondary market transactions. It also adopts the SEC's ecosystem theory of common enterprise. He says this is a disappointing outcome, especially since hopes ran high after oral argument in January. But it's only the beginning, not the end, of the SEC's case against Coinbase specifically, as well as its campaign to attack crypto generally. We all live to fight another day. So the fight goes on, folks. This is why you got to contact your representatives, vote for those who are pro-crypto. And we got to put the pressure on Congress to get regulations through. And we got to call out scumbag regulator Gary Gensler, just like we had to with the debt box situation where the judge sanctioned the SEC for lying to the court. We have to highlight that news and get it out there because part of this is an optics game, right? Gary knows how to play the game. This is why he'll do his victory tour on small judgment wins, but he's nowhere to be found when they get sanctioned or they take a massive loss and get called arbitrary and capricious and much more. But the courts we've seen, guys, for the most part, are not putting up with the lies or hypocrisy of the SEC. So this whole thing is going to go into discovery and we'll go from there. Now, interestingly enough, Edward Snowden weighed in on this news. I was surprised he weighed in. He is someone who's a fan of Bitcoin, but he says, this doesn't bother me. If the SEC keeps acting in bad faith like this, they're going to lose so hard in court that they'll never be able to do this to anyone ever again. Remember when the SEC got spanked so badly that Gensler had to approve the Bitcoin ETFs with tears in his eyes? Yeah. So Edward Snowden weighing in here, and he's someone that people pay attention to, and from a tech perspective and regulations and legislation and governments and so forth. So even he sees the overreach here and is calling it out. Now, folks, we got some interesting news from HSBC. So HSBC's gold token goes live for retail investors in Hong Kong. HSBC is claiming bragging rights for being the first bank to create a blockchain-based real-world asset aimed at retail investors. Folks, I've been telling you all for years, the token economy is coming. Everything on the blockchain, tokenization, fractionalization, and much more. They're going to put real estate, gold, different commodities are going to go on the blockchain. So incredible what's happening. And what I've been telling you guys is to pay attention to which blockchains they use, because that will be very interesting. So the tokenized gold product is available via HSBC online banking and HSBC HK mobile app. HSBC Gold token is minted on the bank's Orion Digital Assets platform. So this is interesting. In November of last year, HSBC teased a tokenized gold offering planned as part of the bank's new digital asset custody platform, created in partnership with Swiss-based crypto safekeeping specialist Medico. Now, if you all recall, Ripple purchased Medico, and I had my interview with David Schwartz of Ripple. We talked a bit about this. So there's no news here as to which blockchain, but I hope that news comes out eventually. Here's a quote. We are proud that HSBC Gold token powered by HSBC Orion is the first retail product in Hong Kong that is based on distributed ledger technology as authorized by the Securities and Futures Commission, said HSBC Hong Kong Head of Wealth and Personal Banking, Maggie NG, I don't know how you pronounce that, in a statement. So folks, I think we're starting to see the token economy grow here globally. Wait till they start putting real estate on it and other commodities. Interesting times ahead, folks. This is why we are still early, and pay attention to the tokenization news. And we, of course, recently heard from BlackRock that they're tokenizing on Ethereum investment funds. They're working with Securitize and Coinbase. So big news here, folks. Well, that's the news, everybody. Don't forget, I'll be at the DC Blockchain Summit May 15th and 16th. You can get a discount on tickets using my link and code ThinkingCrypto. Link will be in the description. I would love to meet you guys there and talk a bit about crypto and go on Capitol Hill and meet different legislators and so forth. If you want to support the podcast, guys, please sign up for my free email newsletter. Also follow me on social platforms, TikTok, Instagram, Facebook, LinkedIn, X, much more. It's free to follow. It's free to like. It doesn't cost you anything, but it really supports the podcast, trying to grow, trying to get the brand out there. So I would really appreciate it if you take a couple minutes just to do those things. Thank you for watching and listening, and I'll talk to you all later.